Okay, so we're getting our earnings seasons. We're flagging off surprising early birds yesterday. Wema Bank reporting its first half 2017. The numbers look good, at least on a few parameters: the gross earnings, the interest, non-interest income, and pre-tax profit. And you can see all that there. The devil, they say, is in the details. We're getting more of that. And the analyst comment will be coming through from today on that earnings from one of Nigeria's tier 2 lender. But of course, we also got Presco yesterday. Last week, we got Unilever that were beats most of the expectations on the street as far as the 2016 numbers was concerned. Unilever was largely positive, and the share price has been riding that wave since. And of course, you can see Presco there. That's the company, Presco Oil. That's not crude oil. That is palm oil. And that's palm oil making more money than crude oil right now. As a matter of fact, palm oil globally is more than $2,200 per metric ton. That's a lot more money than crude oil, around $46, $47 a barrel. Even here at home, palm oil production is beating oil production, at least on this front. Let's get a bit more sense into how the big earnings season will begin to unfold in the next couple of days. Olalekan Olabode, who is joining us from Victoria Island in Lagos, is the head of research at Latifa Capital Management. Olalekan, good morning. It's good to have you here.
Good morning. It's good to be.
Well, not a very bad way to start this current earnings seasons from Unilever to Wema.
Yes, results have actually come in strong. It's not significantly different from what the market had expected. We had expected that earnings were going to be relatively stronger in Q2. If you look at what we saw in Q1, we saw better than expected market performance from most of the companies that released their result in Q1. And we actually expected that, that trend was going to be maintained in Q2. And for a few of the results that have already come in, just as you mentioned, we started seeing that positive trend. We expect that this trend is going to continue, particularly for most of the top tier sectors that we follow.
What is the correlation here between the state of the economy at any point in time and the earnings that companies release?
There's a very strong correlation between the state of the economy and earnings season. And in fact, when you consider how investors take position, particularly for the foreign investors, they follow an approach that they call the top-down approach. In the top-down approach, the first thing you want to look at is how the macro environment is. You look at the macro environment and see if the macro environment is going to be favorable. If the macro environment is favorable, then you now start going down into sectorial analysis, where you try to look for which sector is going to benefit or which sector is going to suffer from whatever macro environment or whatever macro forecast you have. Then after looking at the sectorial analysis, you then go down to the stock-specific analysis, where you start picking out which stock is going to outperform the sector generally. So the macro is very important because all the companies are playing in the same macro space. The demand for the company's products is going to be a function of how much disposable income the populace have in their pockets. When the economy is prospering, you expect that demand is going to be significantly stronger. In a time of recession, you always expect that what the meaning of recession is actually a pullback in demand. So when you see a pullback in demand, you expect that this is going to significantly affect, the demand you see across the sector. So what I'm trying to say is that the outlook of the economy is very important to determine what the outlook for earnings is going to be. And we've already seen that strong correlation play out. Q1 numbers were stronger than expected because when you look at Q1 GDP numbers, it was actually the weakest we had seen, or the best we have seen in terms of in the recession period, save for the first time we saw very low GDP numbers in Q1 16. After that time, we've seen worse numbers, and Q1 17 showed better numbers. In Q2, we have actually seen PMI numbers improve significantly. For 3 consecutive months, we've seen PMI print higher than the 50 benchmark, which is actually good and a good indicator for expectation of the market. So yes, we think that improvement in the macro environment means an improvement in earnings, particularly for most of the sector we cover.
Olalekan, I'm going to ask you these 2 questions straight. You work for an international organization or organization that is local, but with significant interest from clients around the world. That's Vertiva Capital Management. What sectors of the economy do you think, or are these foreign investors looking at in Nigeria as we speak?
Again, depending on what you are looking at, if you are relating the sector to the Nigerian Stock Exchange, then the big name to always talk about is the banking sector. The banking sector accounts for about 25% or between 25 and 30% of the market. That's in terms of market cap. But in terms of volume and value traded, you always see that depending on the day you look at, the banking sector accounts for as high as 40% of the value traded. In fact, when you look at the top 5 value and volume traded every day, you'll be a very shocking surprise if you actually see that you do not see 3 banks being in the top volume and value traded for the day. So in terms of which one is more attractive, a lot of people will always want to tell you about the banking sector. The banking sector is very attractive to foreign investors. They understand the sector well because the dynamics of banking is not significantly different across the world. And so a number of them are always interested in this market. And the banking, when you look at the penetration, banking penetration in Nigeria is still relatively weak to what you see across most of the developed market and even other emerging and frontier markets. So what we expect is that there's still a lot of good potential in this market. So a number of times you see strong interest in this market. But apart from the banking sector, the consumer goods sector is also one of interest to people. The consumer story of Nigeria is very attractive. Given our population size, you know that there's always call for investment in this in Nigeria because of the demand, the prospect of the demand we expect to see, or we're already seeing, we expect to see in the next 5 to 10 years. So the consumer goods sector is still very interesting also to a lot of foreign investors.